Good morning. How's everybody doing out there? Welcome to our premium members from the Simple Trading Life. Let me get switched over here. Just want to make sure, yep, got my screen share turned on. And we'll wait until we get a couple of people in here. I'll get set up on my phone so I can see your comments. Hope everybody's having a great morning. It's nice and chilly here in Atlanta for the second straight morning. Okay, there we go. Have my comments turned on, and we'll wait for some folks to join, and then obviously the market will be getting underway here in about 4 minutes. Morning, Steve. Nice to have you. Just waiting for a few more people to join. As you can see up on my screen there, I've got ES, and obviously right there is where the jobs report came out, and we've had a nice flush of the market. Good morning, Todd Father. Good to see you. Good to see you. About 3.5 minutes before regular trading hours open. As you guys can see who are already on here, see there's 3 of you now. We're right here above demand, and we caught support at this support level, 24, 26, 25, right there. Okay, so we'll see the demand level starts at 24, 2050. So we'll see when the market opens, do they go ahead and just flush it right down into it? And then do we bounce, or can we break through? We have a couple, about 3 minutes to find out. Okay, I'll remove my opening price level from the overnight session, and we'll get ready to draw it in on this morning's session. I was not surprised by the drop. I was surprised that the numbers were as big as they were. They were estimating, I think it said 3.1 million, and there was 6.6 million initial jobless claims. That's pretty remarkable. I don't know if anybody saw it. Somebody on Twitter posted that the number of jobless claims are bigger than the population of like more than half of the states or something like that. So it's pretty significant. Okay, got about 2 minutes to go. We're going to also watch and see what SHOP does this morning. We'll look at it real quick. I'll show you where it ended. SHOP, when everything else was up this morning, gapping up, SHOP was gapping down. And as you can see, we have a demand area. Excuse me, have a demand area right here, but currently 354. Currently, it's looking like it's going to open up right about in this range, which would be under the demand zone. So we're going to see what happens on SHOP. They got a huge downgrade. I really don't know why. It was, I'm going off memory, I posted in the room, I think they took a price target of 600 and cut it all the way down to 400, which is obviously up in here. But anytime you get that big of a downgrade, I don't care what's going on, right? Even when the market was going up, it was the only name I could find that was gapping down at that time. So pretty significant. But we'll watch SHOP this morning and see what it does. I was almost kind of hoping that they opened it right above demand because I wanted to see if it went into demand and then bounced. But right now it's looking like it's going to open up down in here somewhere. So we got about 30 seconds to go. Let's get back over to the market. You can see we were going up, 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 up. We rolled over, and now we've been coming down. This is, obviously we got the jobless claims, but this was probably just going to be structure and then down anyway. So we're going to see what they want to do this morning. Okay, here we go. 10 seconds. Now, this may end up as a hammer as we open, but I ignore that. For open, because open is kind of its own animal. Okay, we opened at 24.47.75. 24.47.75. So I got to draw that in. That's the first thing I'll do. I had a couple of alerts go off already. One of them was shop. And I just had another one go off. It was Zoom. I obviously put the news in the room about Zoom. Okay, so what's going on there is Elon Musk came out and said they're not going to use Zoom anymore for their conferencing because of privacy issues. So most likely that's going to negatively impact Zoom, although they've had so much strength here lately. Okay, there's our opening price level. You can see we just barely went down a little bit. We came right up here to the resistance level at 24.57. That's actually a new level that was just added this morning, and that's based on some very recent price action. And you can see being respected. So we'll watch this for just a second. Well, actually, let's go back and look at shop real quick, and let's see how it's reacting on open. Okay, so really gap down huge, right? Here's where it closed yesterday at 384.67, opened at 350. So it gapped down $34. Right through the demand zone. So this demand zone is no longer in play. In fact, what I'll do is I'll just shorten it, because if you gap significantly down in or over a demand zone, over or under, it's no longer in play, right? So we just get that out of the way. Right here's where it opened. It's kind of went up. Not doing a whole lot yet. So we'll come back. We'll check shop several times today. Let's see what we're doing over here on the market. Okay, right now it's pushing above, right? Came right up here to resistance. Now it's trying to push above. Good morning, Cathal. Nice to have you. Glad you're in here. Okay, trying to push above. We had this huge flush this morning. That was from the initial jobless claims report. We got down here to our support level, caught a nice bounce, just barely poked its head down, and now it's trying to push back up. So we could have a couple of things at play right here. We're just obviously, like we do every morning, we're going to let it play out. Okay. Could sellers be exhausted because of this big move down? That's obviously a possibility. That's one thing. Could this initial move be big money trying to get retail out of the way so it can continue to flush? All right. That we don't know for sure, but what we will know is if it does turn around, we have a demand zone right below here. Okay, so we'll watch the filter. We'll see what the filter says if price turns around. We don't know if it will. But if that's what's occurring, if it's just flushing, or excuse me, if it's just ramping up to try to get retail out of the way so they can try to flush it more, well, they still have to get through here. And so we would see when they get down here, where this number is, or would it come down here and bounce? And then obviously the next scenario is these guys are just totally exhausted, and now buyers can continue the uptrend Now I have to go to a higher time frame. Give me 1 second. Let me go to the 1 hour. Okay. This right here. Okay. We've been on an uptrend for several days, obviously back and forth, creating structure on the way up. Here's where we rolled over, right there. Right there's where we rolled over, came down. Right here at 24.57 is where we caught support. And as you can see, that's a brand new level that I added overnight, or actually I added it early this morning based on this previous price action. You can see it's been respected in the past. Okay, so that level was drawn in. All right, so that would be the third scenario. We came up, we've come down, and this might just be a structure level of this. Now, is that the case? Typically when you roll over like this, that's a sign of maybe some things to come. And we broke the trend line. Okay, this was an upward trend line that we had bounced off of a couple of times. And we broke through there, and we didn't even go back and retest it. I mean, we just broke through it and just went lower. Okay, so this is something that we'll keep our eyes on throughout the day today. Okay, come over here. You see this? See how we just broke through and we never even came back and retested it. That shows strength by the sellers. Came down here, came up. That's the flush from the jobs report. And now we're back up in this range right now. So let's go back to the 30-minute. See, we got 5 of you guys on here this morning, so glad to have everyone. All right, so there's the 30-minute. You can see where we've been to. Here's opening price level. We know we have demand below. That's that green down there. Okay, so now let's go ahead and start putting some alerts in. Okay, now it's sort of made a little bit of a range. So this would be our low side. And up here, just above there, would be our top side. And then we'll know if it starts to go higher or lower. All right, there we go. Now let's go back to shop. We'll see if shop is doing anything. Again, shop is one of those names that usually has quite a bit of volatility, which makes it a favorite of a lot of aggressive traders. And look, okay, so it's got some room, right? It never did come all the way down here, so it had some room. It tried to move up. Now it's kind of fallen back a little bit. I'll bet you that's a pretty significant move. Already, this is a $17 range in the first 7 minutes. $17 range in the first 17 minutes. Okay, and what does that also tell us? We just said the gap down was $34. It's already been right up to the 50% mark. How about that? Okay, we talk about that all the time when it comes to gaps. When you have a significant gap, right, sort of the magic number is 50. So if you kind of reverse before you clear that 50% mark of the gap, it tends to go the other way. If you can clear it and hold it, then you have a really good chance that you're going to maybe have an opportunity to fill the gap. But look what it did. I mean, I didn't even think about that until we looked at that. That's a $17 range, and we already determined this is a $34 gap. So that is exactly 50%. And look what it just did. Went right up to it, and now it's going the other direction. Is that not amazing? We just happen to see it right here in real time just because we came back over to look at it. All right, so now we know we have a potential support area here at 345.15. That's crazy. That's crazy. I've got a he's just a Twitter friend. I've never met him in person. That's a trader, and like most of the trades he takes, a high percentage of them are just strictly 50% retracement trades. So he just waits, you know, like we look for supply and demand and we look for inside candles and things like that, hammers and shooting stars. He looks for big moves on names. He doesn't care if they're up or down. And then he mainly plays 50% retracement moves because they happen so often. You know, like when I tell you guys about my 33, 50, 66% rule on a big move or a real large candle, that's basically what he's doing because he knows that the majority of the time, you know, probably I'm going to say 60, 70% of the time on any kind of a big move up or down, it's going to retrace about 50%. Now, when it gets there, right, it can continue higher or it can go lower, but he's just basically, that's kind of his trading philosophy. And it does play out a lot. Okay, we just saw it happen in real time right there. $34 move to the gap, created the gap, retraced exactly 50%, and then flushed back down. So if this was something he was playing, that's exactly what his target would have been. He would have took the trade and then would have exited somewhere up around the 50% level. Now, that's not something I trade. I don't trade that, but it does happen quite frequently. All right, let's look at Tesla. And the reason I'm interested in Tesla this morning is just because of Elon Musk's comments, but it's not doing a whole lot. Look, open flat, okay, little move to the upside, real small. Now, really, people were grouping Tesla in because it was Elon that made the comments, but he specifically was talking about SpaceX. He said SpaceX would no longer use Zoom technology because of their privacy issues. But obviously, Tesla is a company he owns. So right now, it's not doing a whole lot. You see, you got the 200 right above it. Okay. Just because we're here, let's look at Twitter. All right, Twitter opened up just slightly. Oh, excuse me, gap down. I'm sorry. Gap down has went back up near where it closed yesterday, and that's sort of where it's at right now, but it gapped down. And it was gapping up earlier. Every name except shop, every name that I looked at about an hour and a half before the market was due to open at that time was gapping up, and most of them significantly. Most of them. All right. But then when the market flushed, that drags, 80 to 90 to 95% of those names down with it. What you really hope for great trading opportunities is that a lot of names open relatively flat. That actually gives you better trading opportunities in a lot of cases. Okay. Our advancers are at 1586. That's technically in the neutral range, but in the upper, right? Neutral is 1200 to 1600. Okay. And then once you go over 1600, that's considered bullish. All right. So we'll watch that number. And let's go back here. Let's look at oil. We haven't had any alerts go off on the market, so we know it's still in that opening range. Okay. Oil had the big flush, right? Had the big flush, came from way higher than this. Big flush, came down here, bounced up to supply, came down, came up, created new supply, came down. Now let's look at it a little bit closer. Okay, came up, right? Came right up here. Actually, if I remember right, it's only like 1 or 2 pips. So I just counted that. I just cut it off. And as you can see, the next time it came up, it went right through that area. All right, so came right up here, sold back to the 20, and then bam. Now this run is on news that President Trump is getting involved with Russia and Saudi Arabia trying to help broker a deal. Okay, that's why you saw this big ramp up here. Okay, now you can see over here it's selling off. Look at this. Okay, from here, that's 2247. It's already down to 2178. Okay, so that's 22 and 47 would be 69. All right, so it's already 69 cents down, which on one contract, that's $690. It's $10 per cent. $10 per cent on oil futures. Okay, but here was the big ramp. Kind of came back down, kind of double topped right here. You see this? Okay, now what you would look for on oil is if it gets below here, okay, if it gets below there, then it has the ability to kind of fall back to the origin of the move, which would be clear down in here. This would be the origin of the move. Double top up here. Remember we were talking about W's and M's yesterday? Right, here's your M, which is a double top. Okay, a W is basically a double bottom. All right, so here is your M, creates the double top. Right now it's selling off, and here is your important area. If it gets below right there, and it's coming down, right? If it gets below the bottom of this wick, then the opportunity exists for it to come back down here to the origin of the move, which is about where the 200 is. Right? So we got a lot of confluence right there. Okay, origin of the move. Okay, we had a drop and we kind of came away. This is not a demand zone. We did have a strong drop. We didn't get really much of a base, and then it kind of moved away slowly, and then it picked up steam. All right. I was just trying to wait for a second to see if it was going to flush down below this wick. You know, right now it's right in the middle of this wick, and that's where it's catching some support, which is to be expected. We'll set an alert here because we'll just, I'll set an alert just slightly below. If it clears that wick, we obviously can see it's got some room to run. All right, so we got an alert set there. Just take a peek at the market. All right, so the market never got outside of its range yet, but you see it's now flushing back down. So here's our move, right? Up, back down. This is sort of that first move of the day, which we know typically is just trying to get retail traders out of the way. Now, we talk about this every single day, right? So it's starting to get ingrained in your head, and you see it play out all the time. It's amazing to me, maybe it shouldn't be, but it's amazing to me that retail traders fall for this over and over and over and over again, right? I mean, big money does it like literally almost every day. The first major move of the day is almost always opposite the direction they're going to take it. Not every single time, but almost every single time, right? I guess that one or two times that they don't do it is enough to make retail traders skittish of, you know, I don't want to miss it. I don't want to miss it. All right, but look at this. So we had the big flush. That's before market open. So what's big money thinking? Big money's thinking, retail guys are thinking, well, we're going to continue down. Right? So they run it up. It freaks all those people out who bought to go short right at open. I mean, if you're trapped right there, you're freaking out, right? So then they get out of the way, they reverse it, and now if they want, they can take it right on down. The only thing is would they be able to have enough strength to get through this demand zone? Okay, now look at how this has changed. See, we're below 40 now, which would tell us by the filter we should not look to go long if it does come down here. Like if this just all of a sudden would spike down here, the filter is telling us, right, because it's below 40, that the likelihood of a strong bounce would be small. That all the momentum would be to the downside. I've been trying to watch and use this filter for other things, like even not supply and demand trades. I'm just noticing like where it's at certain times and when the market's doing certain things. I haven't made any conclusions to whether I think it can be used for other things or not, but I am watching. So like, I'll give you a, for instance, like if the market appears to be rolling over, and this is just a small example here. Let me just get this to where you guys can see it. All right. Let's just say this was a much bigger move up, and then we see the market start to roll over and head back down. Well, then I've been looking to see like where are we at? Okay. Are we trending down? Are we, so on and so forth. This is a bad example because this isn't really, that's just a small structure move. But look, say we were having a big move to the upside, and then we started to see topping tails, right? In that rounding formation, which tells us the market may start to roll over. Then I come down and look, and in some cases, right, we're already down here trending down when the market was still going up. There's that divergence that we've talked about. And my friend, he does use that just as an indicator. You can't really trade it because you don't know exactly when it's going to fall over. But it gets you alerted to the potential that, hey, something's about to change. Why is price moving up if the RSI is moving down, right? That's sort of a precursor that, hey, momentum might be about to change. So I've just been watching it. Nothing conclusive. I'm just trying to watch it, and thanks to Todd Father, I remembered to get my Wilders turned back on instead of simple. But there's your settings: 13, 60, 40, and then Wilders. Okay. All right, still hanging out. You see this? Still hanging out right in there. But we ramped up and we flushed back down, and we're still right here, right around opening price level. Okay, let's go through and look at some things. And let's look, as we go through these, let's look for potential trades. Let's look for price action that could be playing out. There wasn't many inside candles. I couldn't find any from yesterday. So in other words, you need to look for price action that's playing out currently, supply and demand, maybe some kind of a signal off of support and resistance. All right, so here we are on Apple. Apple gap down just a little bit, small gap down. It's currently in demand, right? It's in demand. It's come down here. It's pushed back up. It's trying to push back down. Are we going to see a bounce, right? It ended the day yesterday poking into demand. Now, this is a good time to talk about time frame, right? I tell you guys all the time, and it's in the notes in there, each time frame is like its own day. Like it's easy to comprehend like daily. Like if these were daily candles, each candle is one day. Each time frame is like its own day, right? So I'm on the 30-minute, and when you end a 30-minute candle, it's like it's a brand new day starting. So even though we came and we ended right here yesterday and started to catch a bounce, as soon as that candle ended, that day ended, whatever, we're starting a new one here. And where that comes from, think about it, right? If I trade predominantly the 30-minute chart, I'm looking for things on the 30-minute chart, and I think in 30-minute blocks. And there's a group of other traders who trade 30-minute who are going to think that way too. That's where you get that each candle is sort of its own day. Same thing with the 15-minute or the 5-minute or the hour or the 4-hour. Okay, there's groups of traders that trade those time frames. Each time a new candle starts, it starts all over again. Okay, so yesterday, and this is sort of where I wanted to get to, on daily candles, if you get a signal towards the end of the day, you need to be careful, right? On a daily inside candle or a daily hammer or shooting star or whatever, okay? So yesterday's candle, if we get a signal early in the day, man, that's golden because we got all day to see if that thing's going to play out the way it needs to play out. If you get it late in the day, starting at about 3 o'clock or after, you got to be really careful, because now you don't have that much time in comparison to the length of the candle. The candle, a daily candle, right, is going to be 6.5 hours long. So when you get towards the end of it, you don't have much time, if a signal goes off, for it to play out. Now it could trigger and it could have some big move. Yes. Okay, but the probabilities are now you've got less time for that to play out, and then once that day ends, that's it for that move and that signal. Now you're going to start a new day. So you just have to think about that as these things play out. All right, so here we are on Apple, still in demand. Still, it hasn't really taken out its morning range so far, but it hasn't bounced either. Okay, we come over here to advancers. I always just keep an eye on this. Last time we were here, it was 1598. You see it's down to 12 something. What does that tell us? There's more and more names that are starting to decline. All right, so now we come back over here. Let's go to the market real quick. All right, so that made sense that we came up here and then pushed back down, right? Because when we looked at it before, we were clear up in here. When it was like 1598, this candle was like up in here green. Now we see that number decreasing, which means there's more names declining in the market, and that makes sense that we would have flushed back down to where we're at now. Okay, so that's kind of how I use this over here. I'm always watching. Is it climbing? Is it declining? Also know, did a lot of names gap down? Did a lot of names gap up? Or did we have a good mix? If we had a good mix, that makes this number really, really more accurate. Okay, still have our alert set. We've got less than 4 minutes to go on this opening candle. Let's look at AMD. And remember, on every one of these names, let's try to pay attention and see, is there anything that we could be looking for? Early, the first 30 to 60 minutes, that's really recon time. At least for me, I'm gauging, okay, what's going on? What's the market doing? Are there any signals starting to develop? Right? Especially for me on the 30-minute, because that's primarily what I trade. Okay, when we get to 10:30, we'll start looking at the hourly signals. So here's a good point. Look at this. So we ended yesterday. That's not a strong hammer, but by definition, that's a hammer. This wick is at least 2 to 3 times the size of that body. Topping tail's not too big. But look what happened this morning. We already flushed down and took the bottom of it out. Because when that ended yesterday, and then we go through the evening, right, overnight session, this is a brand new day. Brand new day. Now, if we would have opened somewhere up here and went above it, okay, could you use that as a signal? Maybe. It's not as strong off the 30-minute like that from the change of a day. If that was a daily candle and we opened like here and went up and took that out after this strong move, that would be a strong signal, right? That would be a strong signal. I think I have it in the notes. Your strongest signals for scalps and day trades are going to be what happens on the daily and the 1 hour. Daily and 1 hour are going to give you your strongest signals. That doesn't mean you got to trade on there. You can trade on your 30-minute. You can trade on your 15. Those signals tend to be stronger. They're more reliable for scalps and day trades. The daily, so if you have a daily inside candle or a daily hammer or something like that, or then again on the hourly throughout the intraday. So if you see a hammer, on the intraday, on the hourly, and then price starts to go up to take it out, and it's after a move, maybe something like this, it's a great signal for a scalp. Then you'd start looking. Okay, let's just assume that we were on the hourly and this was a signal that we got after this type of move. Okay, where would I be looking for a potential move? Probably right up here to this base, maybe right across there. Okay, maybe right across there. That would make sense. Strong move down, we came down, we dropped, we based, we dropped, hammer. Remember, we're assuming this was like a 1 hour. Okay, then we take out the top of this. That right here, right across the bottom of this basing area would probably be my target. Get up into this base, and that would be a reasonable place that you would think price would stall out or reverse. So hopefully you can see that. With this hammer over here yesterday, remember we missed this. When we came back, it was already like here, and it was moving its way up, and then it moved all the way up over here. Okay, then it rolled over. You see, it rejected the 20. It rolled over, and I can't remember off the top of my head who caught this. I can't remember if it was the unbiased trader or Cathal or who it was, but somebody caught it here, which was the right place to catch it. Okay, I got in late. I didn't get in until it was breaking through here. All right, and then my target was the bottom of this candle, right down here. So price came down, and look, when it got here, look what it did. Then it sort of based, then it dropped some more. Now I missed this. I mean, I still made good money on that drop, but I missed this because I was conservative. I got out where I knew it was likely to stall, and it did. Look, it did right here. But I missed this, and that's okay, right? When I'm out of a trade, that trade's over. That trade's dead to me. I'm moving on. I'm looking to the next thing. You don't want to look at that and then go, oh my gosh, well, if I made, 350 on this, well, if I would have caught that, I probably would have made, 500, 550. Can't think that way. You just move on to the next trade. Just move on to the next trade. Okay, so we just ended our first 30-minute candle. So let's go back and look at the market. Okay, still in this opening range. There's your opening range on the first candle. So still nothing to do on ES. I seen the premiums were kind of jacked this morning. Okay, we already looked at AMD. Let's look at Amazon. And remember, these next 2 or 3 weeks, we're really concentrating on price action. Okay, if somebody sees something somewhere, let us know, and we'll take a look at it. Okay, Amazon, little bit of a gap down. Now here, this is funny because Amazon was one of the names that was significantly gapping up this morning early before the market flushed, and then it ended up gapping down a little bit. Pushed up, it's come back, and it's right here right now. Okay, so this is Amazon. Nothing to do here. Okay, nothing to do there. Let's look at BA. Boeing announced something about their confidence in the 737 MAX this morning, but as you can see, no real reaction from the market, right? It gapped down, dojied, all right, dojied. Now, could that be a potential price action trade? Possibly, right? Didn't really bounce here. It got close. Okay, but we got this nice doji. If you took out one side or the other, just based on what I can see here, let me do this. Let me squeeze it in because I want to look at previous price action. All right, so we just filled a gap. We got almost down to support here. Let me squeeze it a little bit more. Well, really, either way, it really wouldn't matter. If it took out the top or it took out the bottom, right, we look to the left. So if it took out the top, we got some nice little structure here with small to medium-sized wicks, which could start to accelerate us. Then there'd be nothing in here, well, other than this. But still, that's a pretty good move, right? From here, I'm just eyeballing it, 132 up to 130. That's a $5 move. Okay, so if it took out the top of here, we've got some nice structure that could get us going. And if we took out the bottom here, if we look over, same thing. We got some nice structure that could get us going. This wick would be a little bit harder to get over or get below. 116, and down here 125. All right, so that'd be like a $9 move, $9 move. You probably exit slightly before there. All right, so could you play something like that? Yeah, you could. Right? You see that? We like dojis and spinning tops because they show indecision. And then a move that takes out one side or the other is showing some conviction by one side or the other. All right, so that's something if somebody wanted to play that. Let me do this. Let me see. I'm just going to see what the options are on BA. What kind of pricing? Somewhat reasonable, right? Okay, if you were buying a put, it's going to cost you $535 a contract. And if you're buying a call, about the same, about $540. But if you get just slightly out of the money, it starts to drop pretty quick. Okay, so you'd have to make your own determination. Are those reasonable for you, or would you like something smaller, or it doesn't matter, right? Okay, let's go to Baba. Whoop, sorry. Gotta get over to the chart. All right, so here we are on Baba. Okay, Baba's moving up this morning. It spiked up and it came right back down to this support level, and now it's trying to move up. So you can almost look at that as a break, a retest. If you took this out, that would be the break, retest, and go. I would have liked to seen this wick be a little bit shorter. All right, but if you take that out, you've got some room to move, but you do have the 20. I'm sorry, you do have the 20. So let's do some quick math. 188.89. You get up here to the 20, 190. That's a little over $1. Now, if you could break through there, you could get up into here, which is 192, and that's a much better move. Okay, on Baba, 189, a $3 move is pretty good on Baba, right? Because look at the average size candles. I want you guys to get used to being able to quickly in your minds deduce things very quickly. Look at the average size candles, and that would tell you a $3 move would be a really good move. Drink of water. Okay, here's your bigger candles. These are your bigger candles, and that shows you the types of moves that are possible. But here's your average size candles. Okay. All right, so that's Baba. We'll go straight to Biogen. Okay, Biogen had a big sell-off yesterday, just all day long. I'm not sure if they had news. I didn't see anything that really popped out to me, but maybe they did because it's unusual. Maybe they had a failed drug test by the FDA, where they have to submit it. And typically what happens on these pharmaceutical companies is if they get a failure on a drug test, they'll sell off for a day or two, or vice versa. If they get either a thumbs up, they usually get a big spike. But even if they get an approval, they have to test in phases. So it'll say phase 1, test approved by the FDA, they can move on to phase 2, and they'll see a ramp, but I don't know for sure what happened, but that's a pretty big sell-off. Let's see. 309 down to 291, 290. Yeah, almost $20. About $20 sell-off yesterday. Okay, but you can see it's moving up. All right. Okay, same kind of deal that we just looked at. I mean, if it takes out the top of this wick, does it have room to move? This is kind of an in-between wick. It could kind of go either way. It may act as some resistance and hold it down. But if it got above there, then it would probably pop up into here. Okay, so Biogen might have some room to run. Let's look at the cost of their options. Well, right now I wouldn't be interested in them. Look at these spreads. That's sick. 680 to 260. Ugh. 750 to $4. No, you don't want to trade Biogen. Not right now. Okay, those are things you got to look for if you're an options trader. I mean, those of you who play options, you already know that. Okay, first of all, you're looking at the prices of the premiums, but then you also want to look at the spread, right? You don't want some big spread because even if you got a big move, if the spread's big, you might not make as much. All right, you have to keep that in mind. All right, beyond. Okay, beyond has been moving down. 1, 2, 3, 4, 5, 6, 7. Now into 7. 7 days in a row. Okay, from up here, you see it moving down, right? Lower low, lower high. That was actually a higher low. Kind of triple top there. Move down. And we're going to go back to the market. We just had an alert. But then, overall, from here to here, it's still moving down. And as you can see today, gap down, flushing down. All right, that's beyond. So I believe we just took out the top of the morning range. We did, okay. So we took out the top of the morning range, trying to go higher. We've got the 20 up here. Let me get a tighter view for you. We have the 20, then we have 2487.75, which in the past, as you can see, has offered quite a bit of resistance here. Okay, price has really struggled with this zone in the past. That can go two ways, right? You could either say, well, I anticipate it to struggle again, or you could say, well, maybe now it's starting to get weak because it spent so much time here. All right, so we're looking. We had this hammer here. Okay, but then this opening candle, you see we came down, we had this range. Again, it's hard to take much stock in an opening candle only because we know there can be manipulation there. That's why we like to wait and let the market kind of get going. All right, but let's say it came down, then it took the top out. All right, we would have got stopped out, right? Because we already know, we watched it in real time. It came up here and then it sold off all the way back down to here. So we probably would have got stopped out. Then can you re-enter again when it comes above there? You can. That's an aggressive play. Okay, the more conservative play obviously is then you wait until it takes out the top of here, and then you have to gauge, do I have enough room for a take profit target that gives me a good enough reward to risk? Okay, so is it going to get up to the 20 and reject? Is it going to be able to get through? Then we have 2487. If it broke through both of those, it's possible, maybe not on this one candle, but it's possible that maybe it breaks through here and starts to go higher. All right, it's possible. I mean, just from what we can see, these are smaller wicks in a little diagonal, right? Little 45-degree there. So let's do this. Let's set an alert up here at this price level. If it gets up there, we'll know that it's showing some pretty good strength. And then we would watch to see, could it break through and then go even higher? Okay, so we got that. Let's go ahead and look at some other things. Let's see what CGC is doing. We left off on Beyond anyway. Okay, CGC, you guys already know, one of the very few stocks under $20 that I'll trade. There's not very many of them. And that's only because you can make money on small moves. You know, a 40, 50-cent move, you make a lot of money. If you're lucky enough to get a move like this, you're going to make a lot of money on CGC. All right, so CGC actually gapped up, came down, came back up to the 20, caught resistance. Then it went up to the resistance level, and it's come back down. It's currently in a little doji spinning top. All right, so let's see what kind of move it's had today. 1365 up to 1421, 35 and 20, 55-cent move. 55-cent move already. Again, look at these average candles. They're very small. Okay, and then you occasionally get these bigger ones or these bigger moves, you know, like a move like that to the downside. Okay, this was one candle yesterday, or 2 days ago, I'm sorry. Yesterday, when it rejected here, big move down. So rejecting at the 20 at 14.55, and then it came, that was $1 yesterday on this rejection. Okay, now you probably would have been, from a price action standpoint, you would have entered here below the shooting star, and then you had a nice little 3-candle pattern play. See this right here? Okay, and then maybe you get out somewhere down around here. So say 1360 from 14, 18, 40, 60-cent move. I'm telling you, on CGC, you make good money on that. Let's look at where their premiums are. They're going to be low. They always are. Okay, so it's only $67 per contract and only $25 to the call side. So that's telling you the market thinks it's going to go lower, right? Whenever you see the puts are much higher than the calls, that's the market makers thinking that it's going to go lower. The likelihood is it's going to go lower. All right. Don't really like the spread there. I'd like to see that spread be tighter. But anyway, here's what I want to show you. So say you bought like $1 out of the money. Where are we at? Yeah, basically we're at 14. Okay. So you buy 13s and it makes a $1 move. Here's how you calculate your potential. Okay. You're going to buy it at 32. You could sell it at, let me see here. Well, you're going to sell it then at, that's not a very good one today. 32 to about 40. Okay, now on a lot of days, a $1 move, you're going to see 32, and then over here you'll see like 90. You know, you make like 3 times your money, or 4 or 5, but it's not giving that to you right now. They really think it's going to move to the downside. They really think it's going to move. That's why you see the spreads, and they're much more expensive than the calls. Okay? That's for you options people, or people who are trying to learn options. Let's keep moving. Crowd. All right, crowd. Now look at this. Crowd started off with a 30-minute hammer, shooting star off the 20. Okay, and it did take it out, okay, because that would have been, look at this, we're moving down, that would have been a signal to try to go short, but you would have got stopped out almost immediately. They're not always going to work, right? That's why risk management comes into play. Not every signal is going to work. And you kind of look here too, these are countering each other. Typically, the counter is going to be stronger than this. But that was yesterday. This is a brand new day. Okay, this is one that wouldn't have worked. You would have entered, looks perfect, and then price quickly reversed on you, and you would have got stopped out if you had a nice tight stop. And it's now getting up here to where it might even take out the top. All right, this is crowd, which has been moving down, as you can see, last 3 days. All right, we come back over here. We see our numbers are climbing quickly, right? So last time I looked at this, we were in the 1200s. We went from 1698 down into the 1200s, and now we're back up into the mid 1700s. So I'll bet you, if we go back over here and look at the market, we're probably still moving up. Yep. See this? Okay, we're moving up. We still haven't made it up to the 20 yet. It's pulled back a little bit. Okay, but we've got our alert set. So we'll let's keep looking at other stuff. Let's look at Facebook. And we'll look at some forex stuff here shortly. All right, here's Facebook. Big doji shooting star, almost equidistant on both sides. Big one. Okay, so now if you took out one side or the other, then you start looking. If I took this out, where could I move to? Well, maybe here or maybe somewhere up into this wick. Okay, I don't know if that gives you enough reward to risk. I wouldn't take it to the upside. Let's look at the downside. All right, if we took it out down here, now keep in mind, if you take this out, that means you're already below the 200. All right, so if you took out the downside, you know, where's your potential? Okay, your potential is at least to here. So let's look, does that give you anything? 156 down to 154, maybe a couple of bucks, right? 156.18, not quite $2. All right, but that's a decent move on Facebook. You see your normal candles, pretty small. And then if it broke through there, could it go even lower? You got some wicks over here. See these? All right, so would it be likely to get through there? Maybe not super likely. Okay, but that's how you gauge whether you would want to take this or not from a 30-minute perspective. Okay, Cathal. Yep, let's take a look. Aussie dollar. So let's take a look. And guys, anytime you want me to look at something, you just let me know. We'll go right to it, unless we have an alert go off, and then we'll just go back to it. All right, so here's where we're at on the 30-minute. This was that big spike we had the other day. Remember we talked about that? There was probably some sort of news that caused that. And you're wanting me to look for some strong supply and demand. Cathal, tell me what time frame you normally trade on. Give me that, and then I'll look and see if we have anything strong on that time frame. You just let me know. I'll wait until you type that in. Tell me what time frame you like to trade on or normally trade on. And then we'll take a look. While I'm waiting for him to do that, let's look at the bigger picture. All right, here's the monthly. Okay, this is the new month. This is last month. Wasn't really kind of a true hammer. And you can see we open and we've been going down. You see that? Okay, that's on the monthly, red, but we're 2 days in. Remember what I told you yesterday, you can't put a whole lot of stock in the monthly until the second week of the month. You got to give it some time to give you some information. Here's the weekly. All right, now we are, this is our 4th day of this week. We were green last week, we're red this week. And then go to the daily. Okay, on the daily, look at this. Looks like we're rolling over, doesn't it? Came down, made a strong move down, had a big, big shooting star doji here. See this? And then we started to move up. We took the top out. We came up here to the 20. This is on the daily. And now it looks like we're trying to roll over. Cathal, I don't know if you heard me or not, but if you tell me what time frame you normally trade on, I will try to find some good supply and demand zones on that time frame, because that's where you want them, especially if you are scalping or day trading. So just let me know. Okay, but here we are on the daily. Okay, looks like it's rolling over. Okay, where could it go? Okay, see this wick? Right now we're on the daily, and this wick is sort of in line with this trend line. That's why I leave them on there sometimes. We'll cross over like we did here. We come back to it. Okay, caught a little bit of support, then we broke through, then we came back up, caught a little bit of resistance, then we went up. Now we might be coming back down, right? So you have this wick, And then you also have the trend line. All right, I don't know if he can hear me or not. Let me, I'm going to type in here. What time frame do you trade? Okay, just in case he doesn't have his volume up, he could be at work, he could be doing something. And then let's go back to the 30-minute. Okay, so on the bigger picture, what do we know? Monthly, red, but that's only 2 days. Weekly, red. Daily, red, and it looks like we're rolling over. Okay, so those are all things to keep in mind. All things to keep in mind. Now, if we're going to look for strong supply and demand, what did I teach you guys yesterday? The first things we want to look for are big candles. We want to look for big candles. All right, now unfortunately, this is probably wiping this out. Let's look. No, it didn't get there. All right, it didn't get there. Okay, but that's not really a big, we want to see candles like this, or you want to see like several of these size candles leaving a zone. Okay, we're trying to find the best. Okay, 30-minute. Good, Cathal. That's what I'm on. Okay, we want to find the best. All right, this one was a decent one. Obviously, you can see it rejected here and shot down, and then it came back up. Again, probably some sort of news coincided with this. Is this the best? It's not the best, right? It's not the best. Could you draw that one in? We probably could. I'm just telling you it's not the best. And then we're going to look for demand below. All right, so you're going to go to the bottom of that and all the way to the top of the green. And draw it across. Okay, I'm not saying this one's horrible. It's just we want the strongest ones if we can find them. And sometimes they're not there. So if they're not there, you don't force them. If they're not there, you don't force them. Okay, now this is decent. Strong move up. Didn't really base. Okay, we didn't really base. And then we had a decent move away, a base, and then a stronger move away. But again, you want to see a candle like this or like this leaving the zone. Ideally, you want to see a strong move, a short base, and then a strong drop, an even stronger drop. All right, we drew that in just so we can see it. I'm going to set an alert there. Our alert needs to go 6191, so 6190 is where my alert needs to be. And we're going to look for other zones. Okay, so I'd say look to go short. Okay, that's a decent one. Okay, but let's keep looking. Let's keep looking. Let's see if we can find anything that makes sense. All right, now this one needs to be extended across. And we'll see if we've been into it yet or not. 59,801. So just bear with me. 59,801. That's good. All right, let's come back here. Okay, we're not to it yet. We turned before we got there. Now this might just be normal structure, kind of come up and then come back down. And I already have this alert set. All right, so that's another one. I'll show you where it's at. Let's come back over. All right, let me draw this in, get closer, make it to where you can see it a little bit better. All right. Now, this is better, okay? Even though this ends up as a shooting star, what was it when it left here? We had big green candle, big green candle. The only reason it ended up as a shooting star is because it hit supply and it bounced it back down. Okay, so we had a strong move up. Okay, then we came back down. This is our base right here. This is our base. Now, typically we'd be drawing it off of a red candle. Okay, but in this case, our base is right here in the wick. See that? Top of here, down. And then we had this strong move away. Because at one time, this was 2 big green candles in a row. So that means it left this area very strong. And then the only reason it came back down is it hit supply up here. And this should have been shortened. Hang on a second. Once it was tested, like that. There we go. All right, now let's go down a little bit more. All right, now this area, okay, ES is still climbing. We're going to go back and look at it. This area, I don't like as much. This is one that I think I'm forcing. Okay, why? Look how we left up here compared to how we left down here. Okay, I'm going to remove this one. I don't like it as much. And again, I don't want to force them either. All right? Sometimes we get so excited about wanting to draw stuff in. Okay, so like here, again, we come back up here. That was a much stronger move away. Although this is a pivot, okay, this is a pivot. I might leave this one here for now, but I did not like that one as much. And that's probably going to be good enough for now. Well, we have one down here. Let's look. Let me make sure I like it. The initial candle's not too bad, but you can see we got no sustained move out of there. I'm going to go ahead and get rid of this one too. Okay, we want the best zones. Okay, so that's probably going to get you through for a little while here. On the 30-minute, we're going to scroll back across. Well, let me just auto zoom it. All right, so that's kind of what you're looking at. If I squeeze it in, you got one below, you got one above. You're in between them right now. I'm going to drag this one over a little bit more. Okay, there you go, Cathal. Hopefully that helps you out. So, you know, what we want to avoid is trying to force them. And that's why I just eliminated 2 off of my own screen. Because I love supply and demand. And sometimes we want there to be a zone where there's not really a zone. Now, it may be support or resistance, but there's a big difference. Support or resistance, you know, sometimes price just gets there, stalls. You might see a little, and then it kind of goes right on through, you know. Whereas a supply zone, if it's strong, it's going to hold more often than not. All right, let's go back to the market. We had an alert go off, and I'm almost positive it's still going higher. And we are. Okay, so that alert was that we broke through this resistance level, and look how much we already spiked up in just that minute or so since the alert went off. All right, now we're up here testing this. We get above this, we have a wick over here. We get above this wick, and we're likely to go up to 25, 21.50. Okay, but our first area is we have to get up over here. Okay, glad that helped you out, Cathal. Okay, our first area is we have to get over here. So far, it's kind of stalling there. Let's set an alert just above here. Slightly more than that. There we go. Okay, so now if we get up here, right, we'll know that we are continuing to push higher. And I'm going to drag this up and put this right below this wick, and we'll know if price reverses. Okay, see how price just pulled back and now it's making a run back higher again? don't know if you guys were watching that. It pulled way down here, and now it quickly ran back up. Okay, all that is that's the struggle, right? That's where a few sellers have come in, right? And we might also have some profit taking, because look at this move now. That's a pretty significant move. So we might have had a little bit of profit taking, some sellers trying to come in at the same time. That pushed it down here, and then all of a sudden it quickly moves back up. So we got this alert here. We'll stay here just a second or two, and we'll see. Because if it just quickly pushes right back up through there, it's showing some pretty phenomenal strength. Look at this. Here it goes. Here it goes. Okay, that means it's clearing this. All right, so then the next one is right over here. All right, so let's set an alert. Okay, let me drag it so you can see. All right, see, I got it set just above here. This one is 2909.75. I have the alert set at 2510. And man, is it going. Look at it. Look at it. There it goes. All right, so now it should fairly easily make it up here. Look at how quickly it's accelerating now that it took that wick out. Okay, now we'll set an alert right up here. At 25.21.50. Okay. All right, so we've been watching it, right? We knew we had to get over here. It paused for a while, then it broke through. Then we knew it had to get through here. It paused there. You can even see it came up, pulled back, and then pushed through. Let me get closer and you can see this. You see that? Came right up to it, pulled back, and then it pushed through. Then we knew it had to get above here, right? And what happened? It came up, came all the way back down near this level, and then we saw that increase, right? That increase in momentum. And then we took the wick out over here. We're almost up there now. Then we took this wick out with no trouble. Okay, look, here we go. I said if we took this out, we'd very easily make it up here. Man, we are going. Yeah, oil, I saw it. My alert just went off. I don't know if you saw it. Oil is just like going crazy too. All right, so although this is an artificial ramp, and what we mean is it's coming from an unexpected news event, okay, we still got to watch. We still got to watch and see how it plays out. All right, now it's slowing down here at our resistance level. Okay, right here at 25.21.50. See that? Okay, when you watch it real time, you can see it. See how it's respecting this level right now? You knew there was strength when it just blew straight through this wick right here. It didn't even hesitate. Didn't even hesitate. And once it took that out, I knew there was really nothing to stop it from getting up here. You just look over here and look. Because this wick, you see how close this wick is to here? When you take this one out, it's going to bump it up anyway, which is going to clear that. And that's why it got up there so fast. Once it took this out, there was just nothing to stop it from getting to this level. All right, let's take a look at oil, and then we'll come back at this. Okay, there's your ramp. Okay, obviously, I'm not watching it. Todd Father, did he make a statement on oil that he's like trying to broker the deal with Russia and Saudi Arabia, or did they broker a deal? Is that why oil in the market is ramping? You can let me know if that's what it was. I mean, it would make sense, right? Because look at oil. Look at oil. So anybody who was long oil, you wanna either get excited or get sick, one way or the other. 22.53. to 27.35. $5 move. Yeah, that's kind of what I figured. Actually, the rumors or the kind of some of the pre-news came out overnight, and that's why it ramped here. See that? That's why it ramped here, is that it said president expected to, talk with Russia and Saudi Arabia, try to broker a deal. But I kind of figured this either means they did broker a deal or they're close. Okay, but so let's get back to this. 22.53 to 27.39. So almost a $5 move on this 130-minute candle. So here's where oil can be either exciting or sickening if you're on the wrong side of it, right? That's basically somebody who had one contract just made $5,000 on just one contract. If they had multiple contracts, imagine what they're doing right now, right? Oh, awesome, Steve. I see that. Steve got in some USO, which is an oil ETF yesterday. Got into some leaps. Beautiful, beautiful. Okay, I've told some of you guys before. I know some of you are new. I've got a friend who he runs another trading service, and one of his friends is a high roller, professional trader, and he's trading $20, $30, $40, $50,000 per trade. And last fall, I think it was last fall, he made $44,000 on a single oil trade where oil moved, like I can't remember what it was now, but it moved at $2, $3, $4 in a relatively short amount of time. He made 44 grand in profit on one trade. Something similar to this. I don't even think it was this big of a single candle. It was like a pretty big move in a short amount of time because he, let's see, I'm trying to remember how the trade played out. I think he had $10,000 in the trade, and it moved, and he made I know he made $44,000 profit, but I think he only had 10 grand in it, and that's actually pretty small for him. Let me show you what a contract is. Okay, these are options, right? I'm going to show you options, but they're still going to be expensive. Oops, I'm looking at the wrong one. Hang on. There we go. May, option chain. All right. $3,670 per contract. $39.40 per contract. Okay. Per contract. So right now it's high. Okay, volatility's high. Volatility's high. Over here, 17.20. Okay, per contract. Let's go back to the charts. Now, you can buy standard contracts just like on any other futures. Those were options. You can buy standard contracts. I'd never trade oil standard contracts, so I don't even know what they are right now. Maybe somebody in here trades them and knows. But I'm just going to assume probably $5,000 or $6,000 a piece. Still trying to go up, right? Look, now it's trying to go back up again. Let's go back to the market real quick. We can always come back. I think the market might be pulling back just a little bit. Yep. Okay, so finally caught the support. We know what typically happens after an artificial ramp, right? Exhaustion. Exhaustion. Remember the last time we seen this? What was it, a week or two ago? And we had almost the same exact scenario play out. And do you remember what happened later that day? Remember we had the huge sell-off? I don't know if you guys remember that. We were watching it, and we had the same kind of thing. The president, I think, was speaking about something. We had this huge artificial ramp. We came up. We finally caught some resistance. It started to ease back. And I told you at the time, I'm like, it's highly likely that we're going to exhaust. And then later that day, we had an enormous sell-off. I'm going off of memory, but I want to say it was like $144 sell-off or something like that. But it was because the ramp, which is right here, was artificial, right? It was based on an unexpected news event. And then what typically happens is they exhaust, and then price moves in the direction it was going to go anyway at an accelerated pace. Because now there's nobody, I'm not saying that's exactly what's happening here. I'm just saying same type of scenario. You get this ramp, they exhaust. Now there's nobody, there's no buyers left with strength to stop any kind of a downside move. Now we do know we have demand down here. Like let's say this starts to come back down and this ends as a shooting star and then it starts to sell off. Okay, we know we do have demand down here though. That day there was nothing down here, if you guys remember that. We went up, we exhausted, it ended up something like a shooting star or something, and then we had a huge sell-off the rest of the day. So it'll be interesting to see what happens here. It will be interesting to see what happens here. All right, so what I'm going to do, I already have the alert set down here. Okay, so if it reverses and starts to go lower, we'll know. Let's get our alert back up here in case it's able to push higher for some reason. One thing you'll notice about artificial ramps based on an unexpected news event is typically once they find the point where they kind of stall and maybe pull back a little bit, they typically have a hard time going higher. Now, sometimes they can go ahead and what they'll do is they'll put in some small candles and maybe even have some topping tails, and then the market will roll over. But once they kind of stall like they have here, they typically have a hard time continuing much higher. And what is the reasoning behind that? You might be thinking in your head, well, if they weren't really supposed to be going that way anyway, if the direction of price is meant to be going lower, right? Well, then there's no reason. There's nobody up there to continue it. Now, let's say there were, price was supposed to go up and you get something like that. Well, yeah, then it would be easy and you're going to just keep going and going and going until you either hit supply or until the buyers exhaust. Okay, now so far, we've got 13 minutes to go though. So far, you can see it's kind of pulling back, right? You see this? Kind of pulling back. Would not be shocking to see this end as a shooting star. All right, but we've got our alert set here, so let's keep going on. First of all, let's look at oil again. Okay, oil's doing the same thing, right? I'm telling you right now, that's an enormous move for oil. Almost $5 in one candle. Again, per contract, you would have made $5,000. Well, basically, because it was almost. Let's see where we got high. Yeah, high was 39, so it was just under 5,000 per contract if you caught that. Now, obviously, you would have had to sell right at the peak. Somebody probably would have sold more down in here, so maybe they made 4,500 per contract or whatever. Woohoo, boo-hoo, right? Okay, so I know you got to give credit where credit's due. There were some people on Twitter this morning who were calling this, were saying, I'm long oil because as soon as the president, helps them work out a deal, it's going up. Now I saw crazy numbers. There were some people thought we were going to go up to like 35, 40 bucks. That wasn't going to happen in one move, right? Those people are just throwing out wild numbers. But this is an enormous move for one candle. For one candle, you just don't see it. I can let me do this. Let me go. I'm gonna go out to a bigger time frame, 4 hour. Okay, here's that candle. It'll be the biggest candle on the screen. Okay, there was a pretty big one to the downside. Let's look at this one real quick. All right, that was about a $5 candle right there. That was to the downside. All right, but you look at the rest of them. Like this one looks fairly small, but look, it's actually a $2.50 candle. That's huge. Yeah, that's right. Todd Father says today was a good day. Good day to release that negative news, right? The jobless claims, because it was way worse than expected. Way worse. Okay, still oil. Again, see some of these bigger candles? All right. This one right here, high, low. I mean, that's only like $1, which is still a big move for one candle. So that just shows you when you come back over here and you get this almost $5 candle, it just doesn't happen, right? It happened one time over here, and then you come back over here. That was a drop. This is going up. Got almost up, got within about 40 cents of this level. And we do have supply across there too. I just haven't drug it across. Okay, so supply is right up here above this level. All right. Back to the market. And back to 30-minute. And look where we're at. We still got 10 minutes to go. Okay. Still got 10 minutes to go. Like I said, would not be shocked that this might end up as a shooting star. But let's look at the premiums. I'm sure the premiums are through the roof. Yeah. Okay. Now, this is ES, so you're going to pay half of that, right? SPX, you'd pay the full amount. But 44, so basically around 2,200 per contract. Over here, around 2,100, 2,200 per contract, because you pay half of this on ES. That's why they're called the E-minis, right? You pay half. You only get half the profits, but you only pay half the contract. If you're on SPX, you pay the full amount, but then you get twice as much profit too. All right, so yeah, they're pretty jacked. Let me look here. Let me see if anything makes sense. All right, let's say this ends as a shooting star, and then we target demand is at 2420. I'm analyzing here to see if it's worth a gamble. I don't know if it is. Here's 2420. Still cost you like $825 a contract. Now, if it made that move, okay, you come all the way over here, 40, so say 41. I'm making the math easy. 2420. Let me do the math. What did I say? I said 41 divided by, right now it's 17 times 3 would be 42. You could almost make 3 times on your money, but you got to get that move, right? You got to get that move. So I'm giving you a hypothetical here. Let's say it ends as a shooting star, takes out the bottom. Okay, look at this. There's really not much that could stop it on the way down. If sellers decide, okay, you guys had your fun, we're going to push you down. Okay, down here, okay, this wick and this demand zone, it would be fairly likely that they would get there. Now, is that worth that gamble? You'd have to pay $800-900 for this strike, the 2420. But if it made it down there, and it made it down there in a fairly quick amount of time, you could make like 3 times on your money. If it absolutely plummeted, you'd make more than 3 times on your money, because options, the quicker the move, the more you make. All right. So I'm kind of in my head debating whether it's worth doing that. Maybe buying one contract for $800 or $900 and seeing if we get this big drop. Now, the one good thing too, now we still got a little over 5 minutes to go. The one good thing is that would be tomorrow's expiry. So you wouldn't have to sell it today. You wouldn't have to sell it today. Hmm. I'm thinking about it. I'm thinking about it. And it'd be a really aggressive play for me if I did it. Give me just a second. I'm looking at some stuff here. Trying to determine whether I think it's worth it or not. Let me go to... It's really weird. I'm on my Tasty Trade app, and it's acting just a little bit funny. Let me see here. There we go. There we go. Okay, now it came up. I'm going to watch it. I'm going to watch it. I'm debating. And then, see, there's still time left, too. I mean, it might not end up a shooting star. And even if it does, then I got to wait for it to be taken out right there. Got this alert set. But I'm considering it. So let me get back to you guys. We got just a few more minutes anyway here. There we go. Okay, now it's starting to kind of move back up. We've got a little over 3.5 minutes, or right around 3.5 minutes. I mean, it's still significantly pulled back, but I wouldn't do it unless it ended up, excuse me, as a strong shooting star. Like if it ends up something like this and then starts to go, I wouldn't do it, right? The probabilities aren't as high. If we end up, somewhere down here, the body is relatively small. I'm seriously considering it. All right. Is there anything you guys want me to look at? We haven't looked at much forex today, so let's look at Euro USD. Okay, Euro USD. Here we go. All right. Had this drop, caught support, had this big bounce up, and it's selling off right here. Okay, selling back down. Obviously, that was probably about the same time as the news. Okay. Euro JPY. Okay, Euro JPY showing some strength to the upside. Kind of came down here. Not really a V bottom, but it came back up on some strength. It's right back up here. And this would make sense. That would catch some resistance right in this area. Let's go to GBP JPY, which is a typically a pretty volatile name. Okay. See the action on it, how it big swings up and down, big swings up and down. That's why some people like to trade this. I'll get in a little tighter. Okay, look at that. Big move down, big move up. Big move down, big move up. Okay, here's our inverted hammer that sometimes, and maybe, I can't remember if it's me and Sonny or somebody was talking about this in the room the other day. Sometimes it will signal a reversal. But if you go back through and look at all the times it occurs in the middle or near the end of a move, typically it's a momentum shooting star and it's signaling more downside, but not always. And we also know um, that anything can happen at any time, right? Anything can happen at any time. But this is exactly why a lot of forex traders like to trade pound yen, because they get these big moves like this. And if you catch these just right, you know, you can really really make some money. Come back over here, you know, big swing down. Whoop. There's a big move down, big move up, you know, from here to here, big move up. Okay, but that's why a lot of people like to play it. You know what we haven't looked at today is gold. So look at gold, right? Right here was where the first candle that got into supply. We come down to our filter. Our filter is above 60. So it would have said, do not go short, and it would have been right. Here's our filter. There's the first touch. Okay, this was a strong supply zone too. Look at this, strong move up, base, strong move away. Nice candle here, another good one, then just a small base, and then we continue to move away. So that was a good supply zone. However, gold, it blew right through there. There's the first touch. If you come down, we were well above 60, which by my friends' rules state that there's just way too much upside momentum, and we did. We went right through it. Okay, so there the filter would have saved us. Okay, and let's look at GLD, gold. That was the miners fund, GDX, we were looking at. Okay, look at this. Different. Did not get the big move like GDX did. In fact, it almost looks like it's trying to roll over. See this? If it takes this out, it's definitely in a rollover stage. So that's very interesting that GLD and GDX, which normally move pretty much in unison, are moving differently. GDX is going to the upside, and gold looks like it's trying to roll over. Have we looked at Google today? I can't remember. I don't think we have. Let's take a quick peek. That's not doing much. Yeah, Google, this is kind of a slow melt. And look, every candle up and down, up and down, up and down. Nothing you want to trade. Okay, when you see this, well, I'll get closer. When you see every candle looks like that, up and down, up and down, up and down, start thinking about what it'd be like to try to trade that. Drive yourself nuts. It's up, it's down, it's up, it's down, it's up, it's down, it's up, it's down, right? You can't trade that. You don't want to trade that. So you see this kind of stuff, that's saying stay away. Stay away. Microsoft. We haven't looked at Microsoft. All right, look at this opening candle. That's pretty interesting. All right, up to almost the 20, shot it back down. Now it's been moving up pretty strong, right? That's almost a $3 move back up to here. Then it caught some resistance off the 20. Netflix. All right, you see Netflix yesterday got up near supply, didn't get into it, so it still hasn't been tested. Came down, and then here we are this morning. Similar candle, up to the 20, back down, and now moving back up, right? Similar structure as what we just looked at. All right, this is NVIDIA. We had a gap up, back, and now moving forward, and again, almost up to the 20, push back down, but still, look at this, just kind of melting its way up. And that's a decent move. 243, and it was as high as 252, $9. $9. It's a pretty good move. See, sometimes the candles deceive you, right? The candles look small on this chart, but from here to there, that was a $9 move. Pepsi, we know, is not doing much. Let's look at Regeneron. And we'll check out Roku. Okay, Regeneron, another pharma name that's moving down. Remember, Biogen was moving down. Okay, here's its opening range. It still hasn't taken out the bottom, but overall, right, it opened here and it's moving down. And as you can see, it's starting to pick up some steam. If it clears here, it can probably make it down to at least near the bottom of this wick right here. Okay, so if it would clear here, that opening spinning top clears here, can probably make it down to somewhere in the middle of this wick. Then if it would clear that, you'd take these out in a hurry, and then same thing over here. So here's kind of the scenario here. If it takes this out, then it gets down to here. Here would be its next area. But if it got below there, man, it would probably just really accelerate right on down to here. Okay, because everything would be set up for it to do so. Okay, gets below here, then look at that setup. Look at that setup right down through there. Okay, it's like dominoes. I think I heard somebody talk about that one time. When you see price structure like this, candle structure, and here with these small to medium-sized wicks, and they're in that nice diagonal, it's just like knocking dominoes over. One's going to knock the other one over, and so on and so forth, and then that's what creates the big candles or the big moves, right? Because it might not be on one candle. This may come down, new candle starts, okay, maybe even get a little pop back up, then down. So it may take 2 or 3 candles, but this is how you get big moves right here. Just how this stuff's lined up. We've already got under the 20. Now it needs to get under here. And if it got under there, it would have a pretty quick drop down into here. Okay, might catch a little bit of support there. Could, you could see a little retracement, but probably not much if the downside momentum is strong. Then once it gets under there, I mean, literally it should be a free fall down to at least the 469.67. Let me look. Let's look at their option chain. Probably going to be fairly expensive. I'm just guessing. I don't know. Yeah. $1,000 a contract. Spread is way too wide. Okay. Again, this tells you that the market makers believe that it's going to go that way, right? Big spreads. Okay, big spreads. So nothing I want to trade there. However, just from a price action standpoint, that's what we're trying to learn. This is what makes sense. If it takes this out, quick drop down into this area, may catch some resistance there. Then if it took that out, it should just be a free fall right down to this level. Plus you have this congestion right in here. See this? We strong move up, based, then we moved up again. It's not a demand zone. It's not a demand zone. This is just more or less some structure here. Okay, but a little bit of congestion. So then it would make sense that this would be probably where it could get to. Could it go lower? Absolutely, right? But again, look at the biggest candles on the screen and then gauge with where you're at, right? It's not going to probably get there in one candle. It's not impossible, okay? But it's probably not going to get there in one candle. But if it started to move maybe 2 or 3 candles, it could get down there. I'm telling you that if it got like below here, below this wick, that would probably be a pretty big candle, and it would just drop right down to here. So that's something I'm going to personally look at later. All right, we're really kind of just over on our time. 10:45 to 11 is what we usually do. Anybody have anything? Any questions? Let's look at the market right before we hop off of here. See what the market's doing. Okay, so see, we did not form a shooting star here. So even if this comes down and eventually takes us out right here, okay, now I'm not as excited about that play that I was talking about going short and buying the 2420 strike. Okay, something else would have to develop before I would look at that. Now maybe, right? maybe we go inside, maybe even another candle. I'm just trying to think of scenarios. Maybe this ends up an inside candle of this. Maybe you get another inside candle, or maybe you take out the bottom of this. Okay, then maybe I start by looking for a scalp. And if momentum comes down and takes this out and starts to accelerate, then you just don't get out of it. Okay, maybe something like that. But the only thing about what I just said there is the premiums. The premiums are high. Okay, so I don't know. I'd have to think that through whether I would want to make that trade. But I'm just giving you some scenarios. Maybe this ends up as an inside candle. The next candle takes out the bottom, starts to accelerate, takes out the bottom there. And if it really started to go, you could just maybe hold and look, okay, this would be your next target, right? And then if it broke through there, this would be your next target. If it broke through there, then you're talking about down in here, or maybe even all the way down there. Okay, just those are scenarios, and you got to have these playing through your mind. All I'm saying is that the play I was talking about, if this would have ended up as a shooting star and then took that out by buying the strike way out of the money down here, okay, still would have cost $800 to $900. And then looking for that play, that's off the table because this didn't end up as a shooting star. Okay, so, right? No FOMO. You just, okay. Some people might say, oh yeah, but what if it comes down and takes it out now? I'm not interested because it's not as high a probability to play. That's all. Okay. I don't see any additional questions. So guys, enjoy your day. Make good, safe, smart trades. Look for good setups based on price action or supply and demand, and just stay safe, right? Stay safe. Your risk management and your trading psychology are the most important things. So I'll see you in the room, and let's have a great day. Okay, bye-bye.